I think we have to accept the fact that one of the key issues for Central and Eastern Europe in the future will be to develop capital markets. Now, if we develop capital markets, we need long-term local currency funding markets. Without that, it will not work. There, I think you can draw a connect to the foreign exchange lending. And if you take a purist view, you might say, if the banks in Central and Eastern Europe had not engaged in foreign exchange lending to retail clients, we might be a step further advanced in terms of the development of a local funding market. However, it has not been done. This is spilled milk. And actually, if you look at the way the European Central Bank has treated that region over the past years, you do also not have the impression that developing local currency markets had been very much on the top of the agenda of the EZB. To the contrary, I think if you basically put in a nutshell what the position of the EZB was towards Central and Eastern Europe, was that except those countries who are in the euro, it hardly existed, with the exception of permanent criticism of foreign exchange lending. Now, what is very interesting to realize now, the different positions that countries are in that are still somewhat emerging markets but are in the euro, and those countries who are still somewhat emerging markets within the European Union but do not have the euro as a currency. Which countries are actually better off? Now, those who are in the euro will, of course, have a dramatic advantage in developing a capital market. Those countries who are not, and even countries like Hungary, who have been very active as a state in the capital markets for a long period of time, do not have a local currency market. Now, what is the option? To start now developing a local foreign capital market in view of the fact that maybe 5 years down the road, Hungary might move in the euro. Does that really make a lot of sense if most of the instruments that would be issued then would have to be switched in the currency at some point in time in the future? Or isn't it such, and that's, I think, a very, very important question to raise, that we should actually, within the European Union, those countries that are not in the euro but have no local currency capital market should not even attempt to do it, but that we have to find another way on providing long-term funding. That very simply means that there will have to be a continuation of euro lending in Central and Eastern Europe. And that, over the next years, will simply have to be better regulated. Because we maintain the position that, in principle, foreign currency lending is not bad. Foreign currency lending is bad if you do it badly, meaning if you do not account for the risk that foreign currency lending has inherent. If you take into account collateral, if you take into account the income, there might be a way to do it. But there are no other options, and that we have to face. Either we stop it completely, which probably would be, from a banking book point of view, the more prudent way to do, because in every banking book you can read on page 2, do not lend foreign currency to somebody who has no foreign currency proceeds. But then you have to develop a local currency market.